Ed, I'll let you kick us off today.
Yeah. Good afternoon, everyone. Welcome to the Bitcoin Mentor Q&A. As always, I'm Ed behind the Live Free BTC handle, and we're joined here by Nathan on the Bitcoin Mentor handle. We got Vangel up here too, part of Bitcoin Mentor. We got BTC Sessions, and Joe Consorti is our special guest today. Uh, if at any point you'd like to come up, ask a question, talk about Bitcoin, or ask the guest a question or one of us, or just join on the conversation, we'd love to have you. So with that, I'll kick it off with asking Joe a quick question. How you doing today? And do you want to give us a little background with yourself and your Bitcoin related experience?
Yeah, I'm doing phenomenal. Thanks for having me today, guys. Weather is beautiful here in New England, so always happy to sit down and chat on a great Monday like this one. So I have been in Bitcoin for about 2.5 years now. Basically, it all started back in 2021 or 2020 rather. I had earned a lot of money running this painting company during my freshman year of college. Didn't have any vehicle to deploy it into. I didn't want it to sit idly by in my bank account and earn nothing. And so then my buddy Tyler LaRoche, who still works over at BTC Inc., pointed me to two different reading materials: The Masters and Slaves of Money and The Bullish Case for Bitcoin, by by Robert Breedlove and then Vijay Boyapati, respectively. And that's when I actually bought, basically with all of the money I had earned that summer, which wasn't a very, if we're talking, traditional 60/40, portfolio structure, got to be very risk averse. I just completely aped into Bitcoin with everything I had earned over the summer. And it turned out that that was a very good time to do it because Bitcoin was still around like 8 or 9 thousand bucks. So I came in for a number go up, but then over time I became more enthralled with this thing as an asset and how it fits into the global macro picture. And so I started doing research independently and publishing it on Twitter. I would do basically like a weekly thread on relevant Bitcoin and global macro data, mostly on-chain stuff. And then a friend of mine, Matt Snow, who's a mutual friend with Tyler, introduced me to Nick Batias, who is the author of Layered Money, about a little media outlet he was starting, a research publication he was starting called The Bitcoin Layer. And so I jumped on board with him in October of 2022, or excuse me, May of 2022. And basically we built the Bitcoin Layer from a pretty fledgling like hobbyist publication that Nick was doing on the side to a fully fledged Bitcoin and macro multimedia company. And so that's what I'm still working on. And then most recently, I've joined over at Theia as the head of growth. Theia is a very simple Bitcoin self-custody platform for iPhone and web, Android coming soon. I know you BTC Sessions, you are an Android user. I'm an Android user too. So yeah, once it comes to Android, that will be fantastic. But it's inherently difficult to develop for Android just because there's so many different models: Samsung, Google, what have you, Huawei. So, but it's coming. But either way, really cool, really easy to use Bitcoin multisig solution. And so I've been working with them in a kind of an advisory capacity since January. And I most recently came on the team early last month as the head of growth. So yeah, no, that's what I've been involved in up to this point and what I'm doing now.
Excellent. I haven't had too much time to play around and test the Theia wallet, but I have heard good things about it so far. Curious, how's that been going for you guys? Like, are you do you want to share any of the upcoming stuff you have going on with the wallet or plans that you guys have? What is kind of like the market fit that you're looking for with that?
Oh, 100%. Yeah. So, for those who are joining, for those who are still here, Theia is a really simple, easy to use Bitcoin multisig solution that has a lot of capabilities, all from an iPhone app and our web app. The whole selling point is that it's unbelievably easy to use, right? Self-custody in and of itself is scary, and multisig, the idea of distributing your Bitcoin across multiple private keys is even more terrifying. It's hard enough to be able to look after one private key than saying, I'm going to, go create a setup where I need two of these three keys or three of these five keys in order to access my Bitcoin. That is mortifying stuff. So the whole idea is making it in the same way that, like, let's take Foundation Devices, for example. They made the passport and they made self-custody so easy that grandma could pick up a passport and know how to use it because it looks like a phone. We are doing the same exact thing for multisig. And so you fire up the Theia app. It's so familiar. You feel like you've used it before. It's such a seamless and easy experience. You'll probably think you did something wrong because of how quick it was to set up. And then once it is set up, it's such a delightful experience that you'll want to come back to it more and more. And so those are basically the three ideas of Thea. And we've found that so far, our product market fit is primarily retail, but we've also found a really great market, kind of in the same market that Bitcoin Mentor is in, with kind of the Bitcoin advisory or Bitcoin wealth management type entities. So we are partnered with the Bitcoin Advisor, and basically they use us as their multi-sig onboarding platform. So we created an advisor dashboard specifically for them that allows them to make and manage as many client vaults as they want, and then seamlessly manage them and support them on an ongoing basis. And it's a very, very sleek and wonderful looking dashboard. We have some of the best people in Silicon Valley working on this. Sharam, who's our co-founder, he is ex-Google, ex-Robinhood. He built out their entire crypto platform. And we are not crypto, quote unquote. We are Bitcoin only. And that's going to stay that way forever, because that's the only way any company should operate, frankly. So we've got Sharam, we've got Vikas, who founded a unicorn company called Porter, which is doing like $1 billion ARR, something crazy like that. And then we have Smeet, who is ex Deutsche Bank, and he also has done a few other startups. And our designers are just top tier, like absolute crack designers. And yeah, no, the app is beautiful. It's wonderful to use. It's retail focused, and so anybody with any skill level or any knowledge could fire it up and set up a very easy, seamlessly set up a robust Bitcoin multisig vault in minutes, depending on what hardware keys you want. And that's totally modular too. And then on the advisor side of things, it's also something that we found there's a great deal of interest in. And not even just for these major clients like the Bitcoin Advisor and obviously, the Bitcoin Mentor too. I know you guys are using a different platform, but also like individual wealth managers who want to, manage a handful of clients. It doesn't have to be these sprawling networks like Bitcoin Mentor, the Bitcoin Advisor, or the Bitcoin Advisors Network, or any of the other ones. But we found that like there are people who have some level of influence. They don't even need to be wealth managers, but people look up to them and they trust them, and they want somebody to hold their hand on their Bitcoin self-custody journey. And so we've also found that there's a great deal of interest, and a lot of people are coming and signing up and using the advisor dashboard who only have like 2 or 3 clients. And so it's really cool. And the other feature too is collaborative custody, and that's built in. And so when you're creating a multi-sig vault, you have the option to invite a trusted contact. So for example, if I wanted to invite my spouse, Jessica, or soon to be spouse, we're still looking at a wedding date. It's going to start snowing in like 80 seconds here in New England, and it's not going to stop until April. So we want an outdoor wedding. So we're still planning that, but soon to be spouse. If you wanted to create a vault with your spouse, for example, it's as easy as putting their email address in during the vault creation process. They get an email, they download the app, they sign in, and then they're part of the vault, and they can add whatever hardware key they want. And so basically it's taking all of the complexity and fear out of setting up Bitcoin vaults, in a collaborative fashion or in a purely self-custodial fashion. So that Bitcoin can be used the way that it's supposed to be used, right? We know that Bitcoin is not going to become the world's money if all of it is held on exchanges. People need to hold Bitcoin self-custodially and use it in a self-custodial manner. And so Thea, we believe, is bridging the gap between security and ease of use.
That's awesome. Thank you so much, Joe. And I got to say, I'm a little bit envious right now because I can guarantee, snow's coming to New England because I'm currently sitting in my office car getting snowed on as we speak. I do have a list of questions that I want to get to, but before I do, we do have some other speakers up here with us. And just a quick side note, too, congratulations on that recent engagement, and wishing you and your soon-to-be wife all the best in the future.
Thank you very much. Thank you.
I'll quickly pass it. I love to see Bitcoins. I really hope there's, some kids on the horizon. I'm all about making Bitcoiners the old-fashioned way. Mr. BTC Sessions, do you got any questions or comments for our wonderful guest here?
Yeah, I mean, I think it's never a bad time to talk about how great self-custody is, but things out there on Bitcoin Twitter are getting spicy today. So I think it's a good conversation to be having. I think most people are more than capable of, protecting 12 words and going through the paces and learning a new skill. When online banking came out, nobody knew how to use it. And now my parents do and grandparents do. And it's just part of, learning a new skill, and the tools get easier. And so I think we're kind of at the point where self-custody is scary for 2 reasons: because it's brand new and because the tools are in the process of getting easier. So yeah, it's a good time to talk about it. Stoked to enjoy the conversation here.
Couldn't agree more. Like if you look back, obviously the telegraph was an insanely difficult technology to use, and then the telephone came along, and then even that there was a learning curve with learning how to use it. But you see what we have today. It's so far beyond what was back then. I sounded a little bit like Kamala Harris there, unburdened by what has been. That was funny. Geez. The
Were you also from a middle class family? I just want to make sure we
yes,
get that on the
exactly.
table.
I was from a middle class family. I grew up in a middle class family, indeed.
Can you make fries though? Can you make fries?
No, I don't. No, frankly, I can't. I'm not going to steal any McDonald's employee's valor. Okay, I never worked at McDonald's. I do not know how to operate the fry cook. Trump does though. That was a meme and a half yesterday. But yeah, no, it's gonna be so much easier in the future. Everybody's going to know how to store, how to get their seed phrase and then store it securely. Like it's going to be as easy as writing your name in cursive, right? It's going to be that, offhanded, that kind of offhanded, you know exactly how to do it because, you just always have, and then the technology gets better and our methodology of doing it becomes better. It's just one of those things where, there's a heated debate right now about the utility of it and, self-custody not being viable because it's too hard to write 12 words down. And I just don't buy that at all, in the slightest. I know that some people are going around and saying that, MicroStrategy can never custody their Bitcoin. It's completely impossible. And in fact, it's safer when large exchanges and custodians custody Bitcoin. And again, I just don't buy that whatsoever. Because again, if Bitcoin is to be the world's money, obviously we do need capital markets that rest atop Bitcoin, but that has to be Bitcoin native. They can't be like credit cannot be extended. Bitcoin can't be held in a bank, for example, and then we fractionally reserve the Bitcoin, and then we print fiat dollars on top of it, and it just becomes kind of a gold equivalent. Like that's not the way this can become the world's money. I think Bitcoin banks will emerge, but it will be Bitcoin native rather than kind of just taking their word for it. Because we've seen what happens when you trust these large institutions with your Bitcoin and you trust them to do right by you. Bad things happen, right? And so yeah, no, I think self-custody is the future for large entities too. But that's not to say the infrastructure exists today for a MicroStrategy to self-custody all of its Bitcoin. Certainly, there needs to be more complex infrastructure in place for entities such as MicroStrategy in order to self-custody all their Bitcoin. Big can of worms, big conversation to have.
Yeah, that sounds like something a paranoid crypto anarchist would say. Just kidding. I
happen to identify as a paranoid crypto anarchist, so I'll live with Bitcoin anarchist. Thank you very much. So I'm totally fine with that. And even Joe, just bouncing off what you were saying too, one of the things that I find kind of frustrating about these conversations in general is that, like, when you're looking at almost like philosophical principles as a whole, if you can make it work on the individual level, then it's possible to scale it up. It has to be there. If an individual can custody, then of course there's going to be a way that corporations and larger groups can do so as well. And I find it such a pessimistic view that people can't imagine a future where we have more solutions and new businesses building on top of Bitcoin. Like, yeah, just because you don't know exactly how it's going to be done doesn't mean that it can't be done. And we have some of the best minds and best entrepreneurs working hard to improve these solutions, not only for their own benefit, but for ours as well, too. Vangel, I see you've had your hand up there patiently. Jump on in here, buddy.
Yeah, I was going to chime in a little bit on that fractional reserve on top of Bitcoin. I think that will be tried, unfortunately. I think that it will fail as well because, let's be honest, eventually the banks are going to be like, all right, we need to hold Bitcoin, and they're going to try to loan on top of it. But the biggest difference, I think, between gold and Bitcoin in that scenario is that with gold, it's tough to move and it's tough to audit. But with Bitcoin, at any point, if any of these banks actually leverage themselves with their Bitcoin holding and their clients say, okay, settle up, send us the Bitcoin, and they don't have the Bitcoin, then they're gonna fail, and there is no bailout. So I think it'll create more honest lending. But ultimately, I would rather see no fiat and just everything settle with Bitcoin. What are your thoughts on that?
Yeah, well, I mean, dollars are going to continue to exist for the next several decades, maybe even more than a century, just because they're the world's foremost reserve currency. I think the Bitcoin and the dollar stand to be mutually beneficial towards one another because as the dollar grows in prominence worldwide, U.S. capital markets become more attractive, and U.S. dollar rails become the rails that people use. You add that on top of the fact that the United States is attempting to, at the very least, foster the best environment for Bitcoin businesses, whether you're a miner, you're working on the network, you're working on to be some kind of Bitcoin custodian or exchange. We're trying to foster the best environment possible for Bitcoin businesses to operate. And so for that reason, I think if the US dollar continues to have the most on-ramps onto Bitcoin, and it has the best business environment for Bitcoin, and just given the US dollar's prominence is basically the base layer of all, the world economy, I do believe that Bitcoin and the dollar are not enemies, and they won't be. I don't think they ever will be. But I do think that as Bitcoin grows in prominence as being used widely as collateral, then you're going to start to see a change in the way that people lend money. I think you're going to start to see a move away from fractional reserve and a move toward better lending standards that overall will decrease capital misallocation. You won't see degrees in school that are like underwater basket weaving. Basically, there will be no more theater majors ever, because going to school for theater will become too big of a trade-off. Things like that, right? These degrees that have very low utility, you don't need higher education for. That's just one example of capital misallocation that's been caused by terrible lending, by interest rates at or near zero for basically 8 years straight, and then lending to anybody with a pulse. And we're still doing that today. Not zero interest rates, but extremely relaxed lending standards to people and toward capital investment. And so once money becomes hard, you can't print more of it, your lending standards are going to rise. And when your lending standards rise, the world is going to become a better place. And so I do think that, as Bitcoin grows, it's like $1.4 trillion in size now, right? I'm going to look around at my block clock, 67,000. So yeah, like $1.4 trillion maybe. For context, gold is now, I think, an $18 trillion market with its current price. The S&P 500 is close to 40 trillion. And so Bitcoin has immense upside in order to be considered like playing in this game that gold currently occupies, and that the US Treasury market at like probably 25 to 30 trillion dollars, I believe, I haven't looked at it recently, currently occupies. And so Bitcoin has a ways to go before it becomes that collateral for global finance, but it becomes the most pristine collateral because you can immediately call it in, and it is absolutely scarce. And it's 24/7, 365. You can verify ownership of it. You can create smart contracts with it in order to immediately call in collateral once your loan drops below a certain LTV. And so it's just, for that reason, banks are going to want to use it. And because banks are going to want to use it because it's just a superior form of collateral, then lending standards are going to change. But in order to get there, Bitcoin needs to be more than 10x its size currently. And when it's more than 10x its size currently, when it approaches the market cap of gold, I believe I said something, I think it was last week, when Bitcoin does a 16x or 18x from where it is now and approaches the market cap of gold, it'll be, and meets the market cap of gold at today's gold price of about $18 trillion, Bitcoin will be something like $967,000. And so, if you just lab that out over the next like decade, that's kind of like a bear case, right? For most of us in this space, obviously we're, or at least I believe most of us in the space are Bitcoin maximalists. We believe this thing is the future. So, I think at that price, when we're close to $1 million a coin, just the way that the math works out, you will start to see, in the lead up to that, you'll start to see more formal standards for what Bitcoin as an acceptable form of collateral will look like. You'll see lending atop of Bitcoin. And as a function of that, that will also kind of kill fiat lending slowly, because lenders won't want to lend against anything other than Bitcoin. And Bitcoin will be the biggest asset in reserve in dollar terms on most people's balance sheets. And then you start denominating in Satoshis. So a lot of exciting things on the horizon. I think Bitcoin's going to shake up global credit completely to its core. And in a way, that's kind of what we're positioning ourselves for at Theia, like on a multi-decade time frame. Obviously, right now we do Bitcoin multisig self-custody, but I do think that there is a huge market for the first like JP Morgan of Bitcoin. I think certainly River definitely has the moniker of like the most, basically like the titan of industry when it comes to a Bitcoin only exchange. But in order for a Bitcoin economy to work, like with flourishing money markets and capital markets built atop Bitcoin, you need a slew of financial instruments that involve Bitcoin. And so I think there is room in this space over the next decade, 2 decades, 3 decades for an entity to emerge that offers various financial instruments atop Bitcoin and offers different ways for you to use your Bitcoin in an over collateralized fashion. And so, like, in internal discussions, like on a multi-decade time frame, Thea wants to be the JP Morgan of Bitcoin. But right now, what we're offering is the world's simplest, easiest to use Bitcoin multi-sig self-custody solution. That wasn't your question. That was a little plug, just to give you like a window into the future of kind of what we're thinking of, because that's also my role at Thea is like, long-term game planning, which I'm so grateful for. I'm only 23. I don't know why anybody's trusting me to do this stuff, but they are. So very grateful for all of it. And it's going to be an exciting next decade and a half. That's for sure.
Well, it does answer the question, because I do think that there is going to be that in-between period. The only points I would say I think will differ in what you mentioned is I think that ultimately I do think that the fiat will eventually phase out. Why would anyone want the fiat when they would just get the Bitcoin, or as soon as they get the fiat, they would buy the Bitcoin with it? So ultimately, I don't. Assuming that layer 2s and layer 3s get built out in the future, which I think they will, and you'll be able to transact no problem in milliseconds, I don't really see the need. But other than that, I completely agree with what you were saying.
It's very interesting to see where these things will kind of go too, because we're talking about potentially a transition period and decades down the line and how to all be built out. But even just at like a fundamental position there too, right? Joe, what you're talking about is almost like a complete inversion of the current system where the pristine collateral right now is debt, right? We're using U.S. Treasury debt as the pristine collateral, and then actually moving that to a final settlement item. It'll be really crazy to see what plays there, and I'm very, very much so looking forward to it. And just quick side note too, as you guys make the move to be the JP Morgan Chase of banking, I hope you won't be banking Epstein along the way. Just a quick food for thought there as well.
Not.
Ryan, you've been relatively.
Well, hopefully not. I mean,
we don't need.
Honest to goodness, who knows? Everyone's pseudonymous in Bitcoin, so I mean, I pray to God not.
It is for enemies. You do make a very valid point. Ryan, you've been very quiet over here in the corner. How are you doing? Do you have any questions or thoughts, my friend? You're still muted. You may be off the mic. I'll quickly punt it to Ben. Ben, what are your thoughts?
Ryan might be taking a nap. I may have put him to sleep with all my collateral talk.
Yo, sorry. I had to get to the mute button there. Yeah, it's, again, I think I sit at a place where when I first got into Bitcoin, I thought that and maybe we all did, I thought that everything would progress much faster because you get in, you get it, and you say, oh geez, like this makes so much more sense than the traditional financial system, the legacy kind of fiat, what we've been dealing with our whole lives. Why would people not understand and jump on this train quicker? And then as you kind of learn more, obviously there's a ton of incentives for a lot of people to stay with the legacy system if they're directly benefiting from it. Obviously, there's also, people are just slow to learn new things and try new things. And, people have a hard time making moves to gain something they never had. And they're more likely to move to prevent loss of something they already do have. And people will also put up with a lot of bullshit, right? Like people you have places where there's hyperinflation and not everybody is a Bitcoiner, right? Like a very small part of the population are Bitcoiners. And so it takes a lot to get people to move. It takes a lot for those things to change. I do think it's right in saying that fiat will probably be around for a while. And even in that, if people migrate to something that is decidedly not fiat, I also think that we could end up in a place where it's tried something along the lines of, oh, let's back dollars with Bitcoin, which is one Nixon away from being rug pulled again, right? So I think a lot of things will be tried to entice people into either staying in the fiat system or being able to push them back into it when need be, or incentivizing people to stay with things like UBI and all those fun little tools. But yeah, in general, I think people at least have a mechanism to protect themselves, and which is great. And education is going in the right direction, and we can help people with that. And for instances where there are pooled funds, like again in the corporate sense and all of that, I think there's better tools than ones that exist right now. Like I think that the days of just saying, here, Coinbase, take all the Bitcoin, I think that will go away. And if it is custodied on behalf of a large number of people because it's a large corporation, I think it becomes maybe multi-institutional, multisig, and things like that in those instances. But and then in terms of people using it day to day, the tricky bit is, what does scaling look like over the next number of years? What efficiencies do we get on chain? What do the layer 2 solutions look like? And that's a bit of a question mark, and we'll see that over time. But I think the most important thing is that we push people towards the maximum amount of sovereignty that they can that can be economically viable for them.
For sure.
I completely agree. Yeah. Just a quick side note, too. If anybody in the audience wants to come up and ask a question of any of the speakers up here, we'd love to have you if you just want to join the question. And even just kind of echoing both your guys' points there, too. I mean, it'll be interesting because you're right. There's a lot more capital that's going to flow into the space. And I imagine that they're going to start having some additional demands and requirements. And it'll be interesting to see what kind of gets built out, even on their behalf, that then ends up getting adopted by more and smaller users as well. Quickly kind of pivoting for a second here, Joe, because we got the Bitcoin layer side of things as well, too. I'm curious, you've got some fantastic videos and clips out there, and I love your updates on the market. I'm wondering if there's anything of interest that you're currently seeing in the market or that maybe has your attention.
Yeah, so there are a few things. I mean, first things first, the most astonishing thing is that we all know the Fed cut rates. It cut its policy interest rates by 50 basis points, Fed funds and its other suite of policy interest rates by 50 basis points on September 18th. And the interesting thing / semi-hilarious thing is that the 10-year U.S. Treasury yield has now risen by 53 basis points. And so basically, now that the Fed is cut, the market is pricing in higher growth and higher economic growth expectations. It has a higher growth outlook for the U.S. economy, and it also has higher inflation expectations too. Rates are basically up all the way across the curve. They're pricing that in. And we know that the U.S. Treasury market historically moves in advance of the Fed, in advance of markets, of what's going to happen, because it is so large and liquid and actively traded. And so basically now the market has said that, look, the Fed cut. Now we're expecting, a boost to economic growth, a boost to inflation expectations. That might mean we avert recession, but it also might mean that price inflation never does get back down to 2% and it stays at 2.5% to 3% in perpetuity. We're currently at 2.5%. That may be the reality that we live with, because judging by what the U.S. Treasury market is saying, it seems like that is currently the outlook. If you look at credit, so if you look at like how difficult it is for businesses to get a loan, it's never been easier. Credit spreads for both investment grade, which are less risky, and high yield, which are the riskiest borrowers, are currently at their basically cyclical lows. And so they are the narrowest they have ever been, which means that the spread that banks charge and other lenders charge to businesses over the corresponding U.S. Treasury bill, note, or bond to borrow money is the narrowest that it has ever been historically. This is the narrowest it ever gets. So that could be cause for alarm, and because some people may look at that and say, well, it's extremely loose. It can only tighten from here. But also, you have to remember the Fed is cutting rates, and so it is easing in this time of already extreme financial easiness. And so, as a function of that, asset prices are doing extremely well. The S&P 500 is doing, stocks are doing very well on a renewed growth outlook now that rates are coming down and financial conditions are becoming easier. And then obviously, you have the liquidity component of it too. As bond volatility decreases and balance sheet capacity and rates come down, and therefore balance sheet capacity expands, that is liquidity. That is what it is. Liquidity is the capacity of capital. So the capacity of loans and new money to be extended off of balance sheets. That's what liquidity is. So liquidity is expanding, and it's going to expand through the remainder of the year. At least our calculation of liquidity at the Bitcoin layer factors in the MOVE index, which is treasury volatility, and also global central bank balance sheet capacity and the absolute level of interest rates. And that is how we factor that in. And we see global liquidity inflecting higher over the rest of the next year and into late 2025. And asset prices will be the beneficiary of that if we can avert recession, which so far we have. And Bitcoin, of course, is the world's best proxy for not just global liquidity, but also the global money supply, which also is inflecting higher. So that's my market outlook broadly. You could say the Fed screwed up, but I always thought, and most people always thought, that we were going to be in an inflationary regime. Like, it's just too hard to get back down to 2%. The Fed deciding to cut rates now, and the reaction from the bond market suggests that maybe the Fed could have held on a little longer. That also does beg the question, was this rate cut politically motivated? Probably, frankly, let's be real. The incumbent has nothing going for him, and now it's Kamala running, so it's his VP. She has nothing going for her other than a rip-roaring economy and asset. Not rip-roaring, frankly. People are very destitute. Nothing. They have nothing going for them other than the fact that asset prices have been in a bull market for 2 years. And they want to keep that going as best they can. And so given the reaction in the U.S. Treasury market, a lot of the sentiment is that the Fed could have waited to cut, but the timing of the cut may have been politically motivated. That's basically where a lot of people are at now. And the bond market is pricing in higher growth and inflation expectations. Liquidity is expanding. The money supply is expanding too. So expect higher asset prices. And of course, Bitcoin is the most sensitive risk asset out there. The most sensitive macro risk asset out there. So you'll probably want to own a little bit of it over the next year and a half.
Yeah, definitely time to get off zero if you haven't already. But I imagine anybody who's hanging out here is definitely off zero. Now, even taking a quick look, Joe, it looks like even the 10-year Treasury is up 10 bips today, which seems like a big move in the bond market in terms of a sell-off there. I'm curious if you think any of this growth and inflation expectations are the market maybe pricing in the upcoming U.S. election, if they're thinking that perhaps a Trump election is going to result in more fiscal spending. And then I'm also curious if you guys, the Bitcoin layer, have given any thought to specifically if the Fed cut may have not been related directly to domestic issues, but perhaps conversations with other central bankers.
Oh, certainly. Yeah, no, the central bankers talk. They absolutely talk. And global rate cutting is coordinated. And the reason that is because of interest rate differentials. If a small central bank is cutting their interest rates, they don't want their rate differential to be too wide compared to the United States, for example. And so global central banks, they coordinate monetary policy, and they cut and hike rates in tandem. They ease and they tighten monetary policy in tandem in order to keep those exchange rate differentials between their currencies relatively narrow. And they don't create huge regime changes in the way that people invest capital abroad. So yeah, no, the Fed cutting also does have to do with the fact that other global central banks have been cutting. They've been cutting for quite some time, the major ones. Japan obviously is not. It is raising its rates, which has proved to be quite interesting for them over there.
Yeah, 15 basis points and all hell breaks loose.
Yeah, and that also has to do with the fact that the yen is one of basically the most borrowed currency out there. You borrow in the yen because it's low yielding nominally, and in real terms, it is a negative interest rate. So it's so cheap to borrow in, then go invest in other markets where you can earn a positive yield. That's called carry. Borrow at a low interest rate, invest in a high interest rate. When you're doing it between currencies, FX carry, and yen is the most popular currency for doing that. So raising rates over there is kind of it's unwinding the yen carry trade slowly, which means that this trade of borrowing in yen to invest in US dollar and invest in other in US dollar capital markets and in other markets too that have higher yields, that is becoming less profitable. That's basically what that means. And so there is a little bit of selling of assets at the margin as people have to cover their borrowed yen that is now becoming more expensive. But it's not destroying financial markets. It certainly has thrown a wrench in them. But that selling of assets in order to cover the yen carry trade has been pretty muted, all things considered. But yeah, that certainly is another reason that the Fed is cutting. And then what was the first part of your question about the fiscal thing with Trump?
Oh yeah, I was wondering if you're thinking that the growth in inflation expectations may be related to just the upcoming election. That if essentially the market maybe again, it's all just kind of speculation, pricing in the idea of additional fiscal spending once Trump gets in.
For sure, yeah. So it looks like a Trump victory is basically a certainty at this point. He's leading 60-40, something like that, something crazy on Polymarket, and yeah, we know that with Trump, there was less fiscal spending during his term until COVID. COVID happened, and world governments were the world economy was shut down forcibly by governments. COVID didn't shut the world economy down. World government shut the economy down. Important distinction to make there. And I'm sure everyone in this space shares that opinion, right? So the Trump presidency was kind of like it did. The fiscal deficit wasn't exploding. It was coming back in a little bit as a percentage of GDP. And then when COVID happened, that whole thing happened. So I don't think that I think a Kamala presidency actually would see more fiscal spending than a Trump presidency would, because Kamala's basically her whole platform is who she's going to spend money on. She's going to give $20,000 to Black people, is what she said, which is illegal. But basically, she said she would give business loans forgivable up to $20,000 to only one race, which is very illegal. And she's also had a myriad of other things in her platform that are basically how she's going to spend money on her constituents. It's the Elizabeth Warren strategy of politics. Here's how I'm going to take more of your money to spend it on certain groups and certain things rather than getting out of the way. And so I think that under a Kamala Harris presidency, the fiscal deficit as a percentage of GDP would widen way further than it is right now, than compared to a Trump presidency. That said, with a Trump presidency priced in at basically a certainty by modern standards, I don't think that that's what's causing the move in tens. I think it's purely the global easing cycle. Like the global easing cycle is underway. 125 basis points of rate cuts are priced in now through next September. And I think that's the story. I think that's why tens are up so much. And we'll see what price inflation does. We'll see what this does to the consumer, and if it really reignites spending. Rates are coming back up. You see things like higher growth and inflation expectations. I think that's entirely a function of the global easing cycle, not much to do with a projected Trump presidency. And all things considered, like the consumer is still doing very well. I hate to dematerialize people into individual like economic units, but that's kind of the way that we measure things in economics, or at the very least mainstream economics. Netflix just hit an all-time high. It's been doing extremely well the last 4 years. It quadrupled. It's quadrupled from its low in 2022. Generally, some of the first things to go are those lower ticket items when the consumer starts slowing down, like they start giving up some of their streaming services. You don't see that right now, and Netflix hitting an all-time high. So, and also, labor market data is coming in better than expected. PMIs are coming in pretty hot. Prices paid, which is the both for services businesses, which make up 86% of US GDP, and manufacturing businesses, which make up the other 14%. Both prices paid by both of those, by both services managers and manufacturing managers are rising. And so, yeah, basically all economic data is pointing to growth and inflation expectations surging as a result of the global easing cycle. Economic data really improving and coming in red hot as a result of that. Probably on the back end, what you will see is price inflation sticking around, CPI sticking around at this 2.5% annual mark for quite some time. That's higher inflation, which is another reason why we Bitcoin.
Yeah,
100%.
I'm kind of curious on your opinion. You just rattled off some of the expectations of like growth, inflation, and just the general economy, and I don't know, just my own is purely anecdotal. I feel like we're either in or somewhat in a recession, and that could just be wrong, but I tend to feel like the numbers that are put out there are just not accurate, and that maybe are manipulated and done to maybe instill some confidence in the system that we have right now. But I just look at the people around me and my own personal experience, and it's not just inflation, but it's just the attitude towards, I guess, the consumer in like I said, in my own anecdotal life, my personal life, people are much more hesitant to spend money, and wages aren't going up. People are complaining constantly about not being able to afford houses or groceries. There are all these things that are, once again, anecdotal things, but I'm curious what you think about that. If like you think the economic data coming out of this is the government obviously has been tampering with inflation, CPI stuff, um, but just the general broader economy stuff. Because I don't pay attention to these things as much, so I'm curious what you think.
Yeah, certainly the data does get fudged. I'm, my own, as I become, a more seasoned analyst, and what I mean by that is as I stare at my Bloomberg terminal for more hours in a day, my framework has kind of shifted a little bit away from they're lying to us always, all the time because they're malicious and they want to kill all of us. It's shifted away from that more to they're trying to be as honest as possible, but there is a decent deal of manipulation that occurs for various reasons. So that's kind of where my head is at now. Like, particularly, like, this, you can't really argue with us being in a recession when GDP has continually been, very, very steady and consistent. Obviously, GDP, the equation for GDP is, I believe, consumer spending plus investment plus government spending minus net exports. And so consumers may be doing worse. They may be doing worse, but at the end of the day, all of that can be offset by government spending. You have to think of that. And so, like, 2 consecutive quarters of negative GDP growth is what's considered a recession, and that recessions get declared after the fact. So we could very well be in a place where consumers just aren't doing well, and that does seem to be the case. People are stretched pretty thin across the board, right? Just again, anecdotally, I certainly agree with you, but overall, it seems that consumers are relatively healthy. But we also have to remember that government spending can really just offset all of this. And when you're running like a $1.5 trillion fiscal deficit, and as a percentage of GDP, the fiscal deficit is basically 7.5% of GDP. Historically, for reference, like that's just only gotten bigger. In 2002, we ran our final fiscal surplus ever under George W., and it's just been getting continually worse year after year. So GDP is staying positive, but that's increasingly due to government spending just rising and rising and rising. And so because of that, it becomes a flawed measure of economic growth. If you want to measure individual prosperity, that is a different question. And I think it's kind of inarguable that prosperity at the individual level is falling. Otherwise, why on earth would anybody buy Bitcoin? If my dollars were doing what they were supposed to and the S&P 500 was preserving my wealth adequately, I wouldn't need Bitcoin. But here in the West, where we do have property rights to some extent, I mean, where I live, those are certainly going away very quickly. You don't really need Bitcoin for property rights. You need it for wealth preservation. There wouldn't be a huge value prop for wealth preservation if people were doing really well. So I think Bitcoin's price continually rising is proof positive that, people need a different, better savings vehicle to preserve their way of life and raise their prosperity level. So, no, GDP, even though it's positive and it keeps getting revised higher, particularly now, people are increasingly not doing very well. You have to stretch thin. You can't buy as much as you wanted to at the grocery store. We went on a Costco run last week. It was $600. So, yeah, no, it's
holy
that's
shit,
crazy.
that's 600 US too. Like I got the Canadian peso up here, and even when I get bills that big, it hurts like hell.
Yeah. So at the individual level, it's getting harder. But remember, like, and as a result of that, traditional measures of economic growth like GDP become less useful if you're trying to measure how people are actually doing.
Well, yeah, that brings up a good point, and you kind of touched on one of the follow-ups I had, but just I forget where I hear it, but the term GDP and like the way that it's measured, you could think of the iPhone as just a phone, but it kind of digitally materialized like all of these things like calendars, a calculator, a camera into one single product that at the end of the day takes sales away from these products that are built into it, if you could think of it like that. Like no one is really buying a calculator nowadays because it's just built into your phone. That would in a way affect GDP. And I see that with a lot of like digital products and a lot of just things becoming free or trending to the cost of zero, especially these information-based apps that affect the way that we measure GDP. And I know you mentioned like how GDP is maybe not the most reliable metric to follow, but does that kind of make sense what I'm saying there? Because like I tend to think that like if you're trying to measure the system with all these things that aren't accurately measuring like how actual wealth is being used and consumed and generated, is it really even worth looking at? Does that make sense?
Yeah, it's worth looking at because it is still a measure of economic activity broadly, and whether we're growing or contracting. But I think, if we're measuring prosperity, you also have to look at things that are not financial, right? There was a chart that showed young men and young women are lonelier than ever. We were reported to have the fewest amount of friends ever, which is kind of paradoxical if you think of social media as a way of making friends. But increasingly, social media has proven to not be a way of making friends so much as it is a way of putting up some kind of lifestyle that other people might want to emulate, rather than actually being a way of getting friends. It is paradoxical because if you think about it, it's never been easier to put yourself out there and find people like you. For example, all of my friends now that I actively interact with, I found off of Twitter, or I found in my church. And those are things that you can't measure, with like a consumer sentiment survey. Are you better off financially or worse off financially than last month? Yeah, I might be better off financially, but I don't, compared to 10 years ago, I don't have any friends, right? So it's one of those things where you have to take everything into consideration. We all have supercomputers in our pockets. Our phones have, several, several orders of magnitude more memory in them than was on the Apollo 11 module that landed on the moon, right? And so, by all accounts, everyone should be thriving. Everyone should be prosperous. Everyone should be so happy and fulfilled. But there's a purpose and fulfillment crisis in not just this country, but basically all across the West, where we do have access to these devices, and where the United States is the world's greatest economy, but people are reporting that they are more lonely than ever. And so I think you have to take a look at everything when we're talking about like prosperity. Obviously, GDP is waning in its usefulness as a measure of real economic growth, but you have to take into account the entire picture as well. And as much as these devices, our phones, social media has been a revolutionary advancement for humanity, it has also hurt us in major ways. And so I think now more than ever, particularly for everybody on this space, everyone needs to do their best and do their part in finding some kind of community wherever it is, whether it's on Twitter, whether it's in person, which is why I advise to go touch grass and not just go outside and stand on the grass, but actually go outside, go to church, right? If you haven't been to church in a while, go try to find a nice church. It doesn't have to be a traditional church. For example, my church came basically 15 years young. And so it's very new. It's brand new, but it's composed of people who are yearning for the exact same thing, which is connection to a real community, right? Connection to a real community and a connection to God. And that just isn't being felt in the church in modern day. I'm sure many of you in this space may have grown up in a church and grown distant from it. But I will say there is a huge longing for a community and a sense of purpose, and that's being found increasingly offline. Which, also that does lead to GDP being a less useful measure of human prosperity and human livelihood. And anecdotal accounts are becoming more useful. We know we're destitute, but we can't exactly put our finger on exactly why. That's basically the the public zeitgeist for the last 2.5 decades.
Thank you. No, that was a great explanation.
I completely agree.
Yeah, go ahead, Nathan.
Yeah, and even just to echo that, I was just saying, just to echo that sentiment too, is like you're right. If you're looking at these economic measures like GDP, if we're looking at PMIs and things like this, really what it seems like is that we're gathering data so that we can better forecast equity and credit markets, right? But that's not directly related to well-being, to meaning, to happiness, to fulfillment. Kind of jumping off that point for a second here too, Joe, I've seen some wonderfully based tweets along the way there. Also, your banner appears to be somebody with laser eyes that's in very, very good shape. So it seems like lifting has been part of your life for a while here as well too. It's actually really nice and refreshing to see your thoughts on marriage, especially being such a young man. I'm curious how much of both the religious and the family and the fitness aspects predate Bitcoin, and if maybe that's one of the reasons that you were kind of primed and receptive to the Bitcoin thesis. And then also in your peers group, I'm wondering if you're seeing more of this as well too, or it's still kind of maybe you out on your own.
Yeah, it definitely did play a role in it. I will say I always went to church when I was younger. They started preaching things that were completely antithetical to the Bible and completely antithetical to Christianity. I grew up in the Methodist Church specifically. You've seen a split in the Methodist Church actually in the United States now. It is now the United Methodist Church and I think the Global Methodist Church or something like that. There's now been a split because basically what happened is they started preaching things, and I won't exactly go into specifics, that were just not even remotely Christian whatsoever. And so there was a huge split there. And so I didn't go to church for a while. But God and Jesus specifically have certainly always been a very big part of my life in how I grew up. Grew up in a very wonderful household, great parents, very loving family, lots of siblings. And so I always had that base. And the reason I got into bodybuilding and fitness is because, I was bullied a little bit during middle school for being a little bit portly. And I decided to take up bodybuilding kind of as an individual sport. And I found out that I was way better at that than soccer because being kind of a more heavy set guy, I can't really, run around the field for 95 minutes, 2 45-minute halves. And so I found that bodybuilding was a much better sport for me. But over time, it kind of unlocked within me this idea that, you need to earn your outcomes. They shouldn't be given to you. And that is that's the way the world is naturally ordered, and it really should work. And so basically all of these things in confluence with one another, I think it did lead me to Bitcoin and lead me to understand it way more, way faster rather. And understand the value proposition of it way faster than I would have if I didn't come from, a very, great household, and didn't believe in kind of these traditional values. I think it did help certainly because, this disdain for central authority I had was always kind of being built in, right? Obviously, going to church, and having that background, and then also doing bodybuilding, but it was really kind of unlocked when COVID happened, when they sent me home from school and I couldn't bring anything. They shut my school down while we were home for spring break. I wasn't allowed to go back to my dorm to get any of my clothes. So I was really mad. I was extremely mad. This was my school. I was paying for it. And they just did this huge thing. And so that's where the skepticism of like central authority was always kind of bubbling under the surface. And then it was really unlocked really kind of after COVID. And that's where I jumped into Bitcoin. I think my life up to that point and to this point, my life up to that point was kind of a primer for basically Bitcoin being a perfect fit for me, in the way that I go about life. And I also analyze financial markets. And then up to this point, being in Bitcoin has also strengthened those core beliefs and values of mine. Values like family, having a strong faith background, like, right, picking up your cross, following Jesus, getting married young. Again, I'm not married. I am engaged recently. Again, we're in New England for those people who may have joined late. We do not want to have a wedding. So we want to have it outside, and it's probably going to start snowing in the next week. So it's going to have to be late spring or early summer next year. But either way, I think being in Bitcoin has reinforced those values that I already came into it with. And yeah, the second question,
That's
my
awesome.
peers. I am also seeing it in my peer group. The church that I go to is extremely young. It is unbelievably young by church standards, by Christian standards, right? If we think about like the United Methodist Church or really like a Catholic church you might walk into, it is a great deal of grandparents and much older people who are there without their children or with their adult children. And with this church that I go to now, it is essentially, it is 70-30 young people, old people. It is incredible. Like the amount of 20, 30, and 40-year-olds you see in there, people going in by themselves or young mothers and fathers with children. It is extremely encouraging to see. And so I do see that in my peer group and my friend group, there's this yearning for tradition and familial values and all of these things basically that our parents taught us that we kind of shied away from. Now people are yearning for that more and more. And I think Bitcoin just reinforced that for me even more than it already was.
No, that's beautiful. That's wonderful to hear. I'm about 12 years your senior, and unfortunately, most of my peer group, it seems like they've all missed the boat. They've been convinced that they don't want kids, that they don't want marriage, and to very much so live these hedonistic lives. And it's kind of sad for me to see. I know it's just small anecdotal, but I'm very well aware that a lot of people who I've known for a long time will end up being the example of what not to do. So it's both optimistic and refreshing to hear that. I really, really appreciate it. Ben, did you have any final thoughts or questions or something to throw at as we're getting close to the top of the hour here?
I mean, it's just been super interesting listening to the conversation. I've enjoyed it a lot. I don't have too much to add here. Again, tuning into this last little bit, I think there's a definite yearning to feel like you belong and have human connection and feel that you're a part of something bigger. And that's that doesn't necessarily come from sitting on the computer or scrolling Twitter, and that you should go out and make real relationships with people and connect, and you'll find yourself a lot more fulfilled from that. So yeah, that's it for me.
Beautiful. I couldn't echo all that sentiment. Before, again, Joe, I want to be respectful of your time, but just quickly before we wrap up as well, too, I'm curious if there's anything in the Bitcoin space outside of Theia, maybe something you're working on at TBL or any other new wallets or hardware or anything else that might has your attention right now, or you're excited or you're recommending, something along those lines.
Yeah, I'm really excited. Well, there are two things. I'm really excited about Op Next, which is the first developers conference happening in Boston. It's headed up by Will Foxley of Blockspace Media. It's going to be really cool. The guy who HBO thinks is Satoshi, Peter Todd, will be there. So you can get your autograph by yet another person who is not Satoshi, take some pictures with him. No, but in all seriousness, it's going to be really cool. It's happening at the Fidelity Center in Boston, I believe in November 9th. So it's happening at November 9th, Fidelity Center in Boston. Tickets are almost sold out. So if you are in the Northeast, go check it out. I'm going to be there all day, just being an attendee and talking to people. But yeah, you should go check that out. And then also we're working on some really cool stuff over at Theia. Obviously, we're shipping new stuff. Apple is being really awful about letting us update our app, but we have a whole host of features in the pipeline, and I'll be announcing those on my personal account and also the @TheiaBitcoin account, which can be found linked in my personal. If you want to go follow that, I would recommend it. And then also over at the Bitcoin layer, we're constantly cooking new stuff. We have a whole bunch of new hires that are coming on board that are going to help us really ramp up our media. So, if you're not already subscribed to the Bitcoin layer, go check it out. The Bitcoin layer, just search it on Google. You'll be able to subscribe or listen on all your favorite podcast platforms. And that's basically what I've got. Thank you so much for letting me come on the space and talk to you guys today.
Thank you so much for joining us, Ed. I'll pass it to you.
Yeah, thanks again, Joe. I really appreciate the conversation, and it was very informative. Someone like me that is very interested, and I love listening to the talks on macro and the economy in general, but don't know so much the technicalities and the analyst mentality. You really do break it down in a very easy to understand way. So I really do appreciate that.
Thank you.
For everyone listening, yeah, no problem. For everyone listening, make sure you give Joe a follow to stay up to date with what he's doing over at Theia, and also some of the great stuff he puts out. It's always a pleasure seeing that. And if you want to give me and the Bitcoin Mentor handle a follow, you can stay up to date with when we do the spaces every Monday, Wednesday, and Friday, 3 p.m. Eastern time. Make sure you also give Vangel up here a follow. He's part of Bitcoin Mentor as well as BTC Sessions. And if you want to check out Bitcoin Mentor, you can go to bitcoinmentor.io and email one of us or book a free one-on-one session with us to learn more about what we do, how we can help you with anything related to your Bitcoin journey. We can help with self-custody, running a node, multisig, mining, all that good stuff. So hope you all have a great day, and we will be back to talk to you again on Wednesday.
Thanks, everyone.
Awesome. Thank you so much, everyone.
Yeah, take care.
Talk soon. Bye.
Thanks, Joe.
Thank you.